In this session of AP Technology Week, we're going to discuss payments. So let's dive right in and get started. We have four professionals with us today, and we're each going to represent one or two types of payment types. I'm going to represent paper checks. Leanne's going to talk about digital payments and wire transfers. Rob Unger from Nacha is going to talk about electronic payments, ACH. Debits and credits, same day and traditional. And of course, Lynn Lawson is going to talk about P cards, and she's also here to represent instant payments or real-time payments. So let's get started right away, and let's talk about the biggest misconception. I'm going to start off with checks, and I'm going to say the biggest misconception I feel that people have about paper checks is that they're cheap. They're not really that cheap when you look at the total cost of using a paper check. People sometimes think it's less than $1, 50 cents for the postage, 10 cents for the check, 10 cents for the envelope, something like that. But when you add in all the human costs related to paper checks, they're actually one of the most expensive payment mechanisms you can use. So, Rob, since I think that ACH might be at the opposite end of the spectrum, maybe you could talk about biggest misconception.
Yeah, I think there's no misconception that ACH is a very affordable electronic transaction, certainly a lot cheaper than checks. I think one of the misconceptions about the ACH is just an understanding of what it can do in terms of credits and debits. So this is not your accounting credit and debits, but a credit ACH is a push payment. So it's like getting paid by direct deposit. Your employer is pushing a credit to your bank account. And the debit is where funds are being pulled from your account to pay, typically in your consumer life, for mortgage or auto insurance. You give a company an authorization to go ahead and pull the funds from your account. I think with respect to your audience, Mary, and businesses, I think there's a lot of misconceptions around that ACH debit. It really is really convenient. It's easy to use. It's a way to get electronic payments for small businesses, to make payments, to allow that debit to happen, or to receive payments through the ACH debit. So it's an easy way to get started. I think what a lot of people don't understand is that, similar to a contract, what you agree to and the authorization for that debit, drives the agreement about, when that debit can happen, what variability there might be happening with that debit if there's a recurring payment. And just let you know, there's also, recourse and rights you have if something does go wrong. There's things you can do, follow up with your bank and other ways to get your money back. So I'm very bullish on the opportunity for the debits, particularly for small and mid-sized businesses.
Okay. Lynn, perhaps you could talk about misconceptions about both cards and instant payments. And then
Sure.
Lynn.
Yeah. I think when you start thinking about purchasing cards, also known as P cards, issued to individual employees, the misconceptions are around, it goes two different extremes. One, some organizations think, what's there to do? You hand a card to an employee and you just let them go at it, And then on the flip side of things, if fraud were to happen, I think people blame the tool itself. So a misconception with the cards being risky and sort of out of control, when all of this boils down to you have to have controls. If there is fraud, it's usually due to a lack of controls. So it is a very cost-effective payment method, and it can be used very wisely. You just have to set up the right structure, the right foundation. So the misconception being you can't just hand them out without controls, and don't blame them if something goes wrong. It's really a personnel issue. And then when you start thinking about instant payments, well, of course, they're still so new to many people. And I think a misconception is it's the same thing as ACH. And I know Rob can certainly weigh in and say, no, they are not. And I'll say it as well, they are not. It's built on its own infrastructure, and instant payments can occur 24/7, 365. So certainly a little different than ACH. And we'll get more into it, I know, as we go on today. So.
Okay. And Leanne, I'm really curious what you have to say.
Yeah. So I'll start with the biggest misconception about crypto. And, there are so many. And I had my own personal feelings about this, but I had a great educational journey learning about crypto. So I'm going to give you a couple of the big ones that I encountered. And the first one being that the crypto transactions are anonymous and therefore not taxable or subject to any regulatory compliance. Well, that is not true. Some cryptocurrencies offer more privacy than others. But in general, there's the term that's used, pseudo-anonymous. So therefore, when you use crypto on certain exchanges, you are required to submit personal data and information. So corporates and governments can track you, they can track the transaction, and they do this obviously to avoid fraudulent activity. So that was the biggest one for me. And then the other one was it's for illegal use. And I thought that for the longest time that cryptocurrencies were just, out there for nefarious reasons. But just as you can use fiat money for illegal transactions, it's the same for crypto. So it's just about knowing what you're getting into and knowing the payment type. And I think both Rob and Lynn and yourself have touched on that. There are rules and regulations for each type of transaction. So it's just about knowing, what they are. And then with wires, this one's always funny to me because, when I started in treasury and in payments, I always heard that wires are quick, they're safe, they're super easy. So, go ahead and use them for every transaction. Then when you start working in the payment systems, you realize that ordinarily, yes, that's true, but there are just so many complexities and regulations that are changing in the payment space. And with wires, there can be new messaging systems, new ISO standards. Depending on where you're sending the transaction, there can be multiple correspondent banks. So it can take a long time for a transaction to actually settle. And there's OFAC monitoring also for illegal tracking. And there's my favorite new one is the FinCEN travel rule, which means that banks are collecting data on all transactions as it travels, with basically following the money. So yes, wires are a good source of payment. They're a good tool, but they can be costly, and they can have a lot of complexity with them. So again, knowing what you're getting into, if it's a time-sensitive transaction, wire is always good, but just know, the rules and how long it will take for settlement.
Okay, that was pretty interesting. And I have to admit, I had some of those misconceptions. So now let's talk about the biggest change in your particular vehicle in the last few years impacting B2B payments. And, I'll say with checks, the biggest change is we're using less of them. Not less enough to make me happy, but less than we used to. And maybe this time, Lynn, we could start with you and then go to Lynn and then Rob.
Sure. Yeah. So I think the biggest change for crypto was the taxation. And a lot of people thought, well, we're not going to get taxed on this transaction. But, with the regulations and the compliance that the countries themselves are putting around these transactions, they are definitely different means of taxation and different methods depending on the countries. So I think the biggest changes are going to be that, it is now considered a transaction that will carry its own taxable part with it. So, companies and individuals alike really need to realize that it is a legitimate form of payment. The adoption is high of the currency, but I think the tax will also impact how much of the transaction corporates and individuals are using. And then with wires, I don't know the stats particularly. I'm sure Rob does. He knows them off heart. But with the new ACH same-day limits that have come in and increased the same-day limit to allow corporates to send payments with larger dollar values same day, I think the impact to wires is that, you're going to see corporates moving more towards ACHs, which is a great thing. But I think you're going to see it because we don't have that holdup of dollar limit anymore. And also with wires comes a lot of scrutiny, and there's a lot of fraud associated with wires too. So for me, I think from what I've seen, the biggest impact is going to be the adoption of wires in domestic transfers and smaller dollar values. You'll still need to use them for international transactions, but I think you'll maybe see the shift to those types of payment types internationally.
Do you think the banks will lower their wire fees?
I think they're going to have to, with fintechs coming in and, also real-time payments with card payments, ACH. I think the banks are going to have no choice if they want to keep customers and keep the transactions to lower them. And of course, with, the increase in technology adoption, things do become cheaper to use for banks. So I think we'll see it. And if we don't, we need to push for it.
Right. Lynn?
I think, the big message here in terms of change is simply growth. And that applies both to commercial cards like P cards, but more specifically, virtual cards. So in the virtual card space, where we all might know them best for being a possibility for invoice payments made by AP, they're increasingly being issued out to employees, sometimes even subcontractors, contractors, even right to the mobile devices of these individuals to be used in a variety of ways. So that really is a big change. And I think a lot of that was driven by the pandemic and the difficulty at which it was sometimes, I guess it was hard to get cards into people's hands.
Mm-hmm.
So why not go the virtual route? So that has been a big change. Virtual cards are now being used for employees' travel. And all of these things are true even from several years ago. They just have really been taking off more and more. So employee travel, even just some random purchases, still being used for invoice payments. And then too, on the instant payment side of things, growth is the theme all over again. I think even though it's a newer payment method, the newest probably crypto's pretty new. Mm-hmm. But, when you start thinking about real-time or instant payments, the use cases are continuing just to expand and go up. And right now, we don't even yet have the offering from the Federal Reserve Bank or Federal Reserve System in the U.S. Their product, FedNow, will be released next year. But even still, organizations and banks alike are finding more reasons to get real-time payments into businesses, into organizations. And one use case that we often see would be in the disbursements area, whether you are an insurance company that needs to get a payment to a customer, any of those situations that might be business to consumer or government to consumer has been a growing use case for instant payments. You've got even the ability to have real-time payments work in conjunction with cards. So what I mean by that is if you're an organization using cards and maybe you don't have a great credit rating or you don't have the ability to have a large organization limit, you might have to pre-fund your cards in order to use them. Well, now instant payments are a great way to fund those cards immediately. So no waiting around, where previously that might have been done through, say, an ACH payment to fund the card. So a lot of different expanding uses of real-time payments. And sometimes they just kind of go along with the card world and they sort of collide at some points. But we'll continue to see a lot of different, I think, innovations, emerging now with all the different choices out there.
And Rob?
Yeah, I think picking up on what Leanne was speaking about, I think the biggest change in ACH the past few years has been same-day ACH, so that a payment sent today can be received today. Not real-time, like a real-time payment or, in 20, 30 minutes like a wire, but certainly in that same-day time frame. And as Leanne was saying, we first rolled out same-day ACH, there were certain limits, cap sizes put on the maximum payments that could be sent as we're trying to manage risk in the network. To start off as $25,000 was the maximum, and then I think $100,000, and now it's $1 million. And what a lot of, I think Leanne, I learned this from you as well, a lot of treasurers didn't want to have, two different processes for these kind of payments. So if you think about $1 million cap now, I think kind of satisfies the need for most wires. They can have a similar process for these payments that have to go out very quickly. And we've seen just an enormous explosion in the growth of same-day ACH, particularly as we've raised these caps.
So the next issue I wanted to address, and Rob, I want to start with you because I thought about this, is what I call the finality of payment issue. It was brought home to me recently. My daughter bought a condo, and when we got the instructions for her to put her down payment down, which she had to give to the financial institution, the wire instructions came, and it said, "Please do not send money by ACH or Western Union MoneyGram." And as soon as I thought of that, I thought of you, Rob, and the whole finality of payment issue. Because obviously it'd be cheaper to do an ACH than a wire transfer. In fact, the bank came and when we went to do it and said, "Are you sure you don't want to do an ACH?" Because, they charged, I don't know, $25. So you want to talk about that issue a little bit, Rob?
Yeah, that's a great question. When is my money, right? And I want to pick up some themes that both my colleagues, Lynn and Leanne were speaking about here earlier. There's rules in every network about when payments are final. I'm going to touch on that with respect to ACH. But if you don't know the rules, if you don't have internal controls in place, it doesn't matter. It doesn't matter what payment system or what payment type you're using, you're exposing yourself to issues. So very important to know the rules around the payment that you're using. Very important that you have internal controls. So the finality in the ACH, the finality with respect to payments, when is my money, in a wire, you send a wire to the wrong account, your money's gone. You have except for begging, you don't have a lot of opportunities to try to reclaim that money. The ACH does have, availability for some kind of recourse around administrative errors, regardless of the size of payment, there's a recognition of that. So that's a big difference. But with respect to when's my money, with the consumer payment, if you pull funds from a consumer account, really the consumer has up to 60 days to dispute whether or not that transaction was authorized. That's not a natural rule. That is a federal government rule, something called Regulation E, which we have to abide by. So, in essence, if you're getting a consumer payment that you debited that consumer's account, 60 days is the time frame when that payment is final. With a business payment, it's 2 days, right? So certainly, that works very well. But it gets back to, if you're not doing daily reconciliations, if you're doing that every week, Mary, I know you've talked about this, or you're doing it every month, you're exposing yourself with respect to if there were any errors. So in a business, your money is absolutely your money. It's an ACH transaction in 2 days.
Lynn, you want to talk to that issue?
Well, yes. As Rob noted, when you start thinking about card payments, you do have some legal protections, at least, here in the US, and I'm assuming that applies elsewhere. But, just think for a moment the difference between using a card for payment and instant payment. They're, to me, just polar opposites.
Mm-hmm.
When it comes to being final, it's like, with the wire, arena, that when you use instant payments, it's irrevocable. It's final. And so an organization really needs to be very certain, very careful about who they are paying, and proceed, with caution. And Mary, you and I have talked about this, right. From a peer-to-peer or person-to-person. It becomes very, very critical as well. But then on the opposite side of the spectrum, you have card payments. And, we know as consumers, when a transaction is approved, if we're making a purchase, we're more or less enacting a guarantee to the supplier that they're going to get paid. And, I guess the advantage is that cardholders do have the ability to dispute a card transaction for many different reasons, whether the transaction was unauthorized, potential fraud, if it's a duplicate payment and the supplier won't credit them, if they didn't get what they ordered. There are all sorts of situations. So in one case, you have instant payments, final. An organization needs to be aware of that. And then on the other side of things, card payments, you have the ability to dispute, and it's a pretty generous window, and it's really what the organization wants and the different situations for usage. But they've got their pros and cons, certainly.
And I can't wait to hear what you have to say, Leanne.
Here it comes. Get your coffee. So, Mary, in your example with the mortgage, the reason those companies require wires is because, of the finality of the payment. Once the transfer is complete, it can't be reversed. And if there is a requirement to refund the money, you have to go through the bank. They have to try to recall it. It's timely, it's costly, and you're not always guaranteed of the
Right.
recall. Just, there's many reasons. There's legal reasons. There's, contractual reasons, but a wire is really akin to handing over physical cash. So I think that's the difference between that payment method. And then when we get to crypto, now this one is an interesting field. This one is very technical. So in theory, there is finality to a crypto payment transaction, but the transfer is only completed when both sides of the transactions are acknowledged and then accepted by that particular network. So there can be a slight delay in waiting for the blockchain to complete. So, that's where the risk comes in. But in general, the finality is really dependent on the type of crypto exchange you're using. So here, the lesson for corporates and individuals alike is that the passage of time is not going to guarantee the irreversibility of this type of transaction. So you have to know what you're getting into. Your payment department needs to do their homework on the type of crypto and exchange they accept and use in payments. So, you just have to really highlight the fact that there are these different payment types. Lynn mentioned it as well. There's rules and regulations of them all. And unless you know the technicalities of the transaction, your money's not yours at the end of the day. It's dependent on the transaction type that you use. So just be careful with them.
All right. That's pretty interesting. I did not know that.
Yeah.
Before we get to the easiest way to move from paper to other forms of payment, which is a big push of mine, perhaps we could have each of our panelists take 30 to 60 seconds to introduce themselves and their organization. So Lynn, we haven't started with you, so how about we start with you?
Thanks, Mary. So as noted, I am from Recharged Education. It's an organization that I founded back in 2014. And my main focus is in the commercial card space. But as you've probably gathered, I have expanded the scope a little bit. I've gotten into some real-time payments material. My whole organization is set up to offer consulting, training, development of materials to both end user or buyer organizations as well as providers.
Okay. Leanne?
Yeah, so I'm Leanne Perkins. I'm the Assistant Treasurer of Specialized Bicycle Components. We are a provider of high-end bicycles and components in over 100 countries and operating in over 20 different currencies. And I personally am a treasury professional that is a passionate advocate for the treasury profession. And I really enjoy talking to people like Lynn and Mary and Rob. And thanks for teaching me about your payment methods as well. I always enjoy being a panelist with you guys.
Okay, and thanks. And then Rob.
Hey everybody, Rob Unger, Senior Director with NACHA. We are essentially the nonprofit governing body for the Automated Clearinghouse Network. So our rules and governance provide for the interoperability between all the banks, the 10,000 banks, the millions of businesses and millions of customers, consumers who use the ACH, whether it's for direct deposit, payroll, B2B invoice payments, tax payments, that kind of thing. So we're the governing body, and we develop solutions where we think there are some gaps in availability of software for helping to process ACH transactions.
Now, there's links to find out more about these guys and their organizations down in the show notes. And we're also going to put in their links where they appeared in prior AP Now podcasts and YouTube videos, so you can listen to them also if you want to hear more from their expertise. All righty. So all that down in the show notes. What is the easiest way to get started moving from paper checks to whatever the particular payment mechanism is? And Rob, let's start with you because ACH is the one, at least I'm always pushing.
Sure. Well, if you're talking about accounts payable, and let's say it's a small business, I think the easiest way is to look at your bank or credit union, what they have available that's akin to online banking, right? So I think a lot of people are pretty familiar with online banking options. You can go on there, you can set up a payee, send a payment, schedule the payment, all that kind of thing. And those services are available for small businesses as well. So check with your bank or credit union on that. There's also plenty of third parties out there that can help you get started. Some of these third parties are integrated with software you may already have using your accounting software, or some may be separate that you send transactions through their user interface, or you provide a file for them that you can upload. It could even be a spreadsheet file, and they send the payments out for you. So I think there's a couple quick ways to do that. For your AAB folks.
Okay, great. So Lynn, I think we discussed that probably there aren't that many people looking to push to instant payments just yet. That could change in a year or two. But how do you recommend moving from paper to P cards?
Well, I think when you start thinking about P cards in particular, which all along have been an ideal payment method for the low value transactions, such as anything under $2,500, but certainly they can be used for higher dollar amounts, and organizations do, expand the usage. But, when you start thinking about those low dollar amounts and you analyze your AP file of payments, if you really get into it, the majority of the payments most organizations make, and majority could mean 50% and higher, are actually very small in terms of the dollar value. And so those are the transactions, you could really start thinking about in terms of moving from a paper check over to a card product like a P card. And to do that, involve your card issuer if you already have a card program set up, and have them take a look at the suppliers you're using today, whether they're card acceptors. And I know it's not a perfect science, but it's a good starting place. Similarly, most card issuers are willing to help you analyze your file of AP payments and make some suggestions about what to try to move over to a P card product. And I think within just your policies, it's very advantageous to have some sort of payment policy as to when do you use each of the different payment options, not just cards, but ACH and well, even crypto in Leanne's case. So I think you just have to do that deep dive into what you're doing today and start to identify really what is the best payment mechanism for the different types of payments you're making, with a great start being look at the low value, moving over to P card.
All right. Now, Leanne, I don't think many people are looking to move from paper checks to wires.
Yeah, probably not. But I think the best way to stop people from using checks is to just straight up outlaw them. When I'm president, my platform is to outlaw checks. And I think the only way you do it is really to disincentivize people from using checks. So you have many other payment options, as we've learned about today, from ACH to real time to cards to crypto. But I think you've got to remove checks from the choice of options that companies have. And you said it at the beginning of this podcast, Mary, that checks are really expensive. Yeah. And people don't necessarily calculate the entire value chain of a check. And so it's expensive and it's time consuming. So in order to disincentivize, you have to give them a reason to use some other alternate means. And we all know, ACH and real time and cards are a lot cheaper. The banks and the vendors and third party vendors are willing to help you get, into these new means of payment transactions and moving away from paper-based to electronic transactions. So I think it's really about educating the companies, knowing what other options are out there, and also knowing how easy it is to get set up on these electronic transactions. And I know that there's a lot of companies who use checks because it's the status quo. It's what they're used to. Their systems are set up like that. But it's just about showing them there is an ease of transferring, and usually your bank and other educators are out there to give you the best advice, to learn from their ways, and to just ensure that, the more you know, the wiser your choices become.
Right, right. Okay, moving away from paper checks, how hard do you think it will be for most companies who don't have Leanne as president, not just the innovators, to get to the point where they are making less than 10% of their payments with paper checks? And Leanne, let's start with you.
So, in my experience, talking to a lot of different treasurers and my peer network, that the more financially strong a company is, the less willing they are to push back. So I think it's a really target-rich environment, because the innovators and the financially wealthy companies are not, necessarily just changing their back-end way of working. They're working on other things. They're working on customer-faced programs and initiatives. So I think there's definitely ways to benchmark your peers, make sure that you get modernization practices implemented, and again, do the cost-benefit analysis. Checks do not make financial sense. And I think it is sometimes hard for companies to change. As I said earlier, it's the status quo. But if you want to be competitive and you want to stay on trend, benchmark your peers and make sure you're doing what's best for the company in terms of protecting the assets and the costs of the payment system too.
Not just what you always did that you know how to do.
Yes.
Lynn, what your thoughts?
Yeah, I absolutely agree with everything, Leanne, you've been saying, and I keep nodding my head and smiling. And it's so interesting because, I might get a group of friends together for dinner, and I sit there and start grilling them on what are the payment practices of your organization. Yeah, I'm really a fun
You're a
dining.
treat, Lynn.
Yeah, a real fun dining companion. But what I keep hearing over and over is, similar, Leanne, to what you were saying. It's just they're used to what they've always done, and certainly checks are what they have always done. And so many of these decision makers don't understand the other payment methods. So that's where you mentioned education, and that's my big platform. But it's also, they think if it's not broken, then why fix it?
Mm-hmm.
And they have so many other priorities going on, what they call their real business. If they're an insurance company, they're dealing with insurance, or whatever the case may be, that it's hard, I think, Mary, to get them that far down in terms of check usage, because they just don't see it as a priority when, it's working and they've got other fires to put out. We all know this day and age, lack of resources is a real problem. And so I think the interest is there, but there is just that lack of education, and just too many other projects keep coming ahead of it, unfortunately.
So, Rob, I know you've probably got a lot to say on this issue.
Certainly agree with everything Leanne and Lynn have been speaking about. Companies have other priorities. There's entrenched practices. There's maybe a lack of education. But, it's not real new stuff we're talking about. Mary, I know you and I have talked about this when we talked with Matt over at Credit Research Foundation, for example. Sometimes AP and AR just have to talk. Right. There's some real low-hanging fruit we found in our studies and whatnot, that simply asking, your supplier about ACH can lead to tremendous adoption. What happens is, during the onboarding process, things are set up and so they're just on autopilot, right? But simply asking them about ACH and being able to do that, it is a big lift. A lot of people say, well, we don't have the budget and whatnot. Well, we've heard companies that will have an intern that will just make calls to suppliers and try to get the information. In other words, don't overcomplicate it. You can easily have an increase in adoption simply by doing some outreach and asking.
Okay. All right. So before we get to the future and what we can expect, I just want to address the issue of what you guys see and what you hear from your peers as the biggest reason businesses are not adopting or embracing whatever the particular payment type is, be it ACH, crypto, etc. And Rob, why don't we start with you? We haven't started with you for a while.
Okay, sure. Yeah, I think, besides the misconceptions we talked about, the entrenched practices, the other priorities, I think, I still have my ACH hat on, but there are real times when, ACH doesn't make a big difference and you have to explore other things. It's about knowing options around real-time payments and some of the things Lynn was saying. I'm thinking of, waiters and waitresses who, there's a lot of movement towards daily pay now, and you've got to settle up the tip jar at 2:00 in the morning, and ACH isn't available, right, until the next day. So there's some timeliness issues around some of these gig situations, but for the most part, it does apply. So kind of understand what your need is and match that payment type. Understand that one payment type doesn't fit all your needs, right? But I understand the different options out there.
Okay, Lynn?
Yeah, I think, Rob, you raised a really good point. When you start thinking about, instant payments or real-time payments, not only do you have that lack of familiarity, that lack of education, but truly it may not be a real go-to choice for a lot of different industries. You mentioned the situation of servers settling up the tips. Real-time payments can be, a huge advantage for those situations. Or we know, like Uber, the drivers being able to get the funds up to, I think, 5 times a day through the real-time payment channel. And so you're right. It's about understanding, the types of payments you're making and what you need to do. And real-time payments will be maybe more suitable for some industries over others. And so that can be a big reason why some just don't embrace it, because it's a little outside of what they really need. Now, when you come to the card products that are out there, number one, going back to my earlier comment about there's a fear perhaps of misuse, abuse in the card arena. But we know with the right controls, they're a very good payment method. And then I think when it comes to not embracing card payments for the AP's invoice payments, it has more to do with just they're happy with ACH. Or, I hate to say it, happy with checks, as we've been talking about. So, they've got other tools there. And so it's back to, hey, we're comfortable doing what we're doing. And so why change? But, it still just boils down to really looking at what will give you the biggest benefit for each organization.
Okay, and Leanne?
Yeah, and I think, I'm okay with businesses embracing any type of electronic payment method as long as it's not check.
Right.
So
Me too.
I think there's not a lot of people who don't embrace wires. I think sometimes it's quite the opposite, where, in corporates especially, they don't really understand the cost of a wire, and they would rather just send a wire because it's easier than an ACH batch or card payment. So sometimes it's, the opposite problem that we have there with wires. But I think on the crypto side, there's a lot of reasons for not embracing it. And that's mostly because we don't all know, all the rules. And it's a tough exchange right now, especially with the volatility, and corporates don't know exactly how to manage it on the accounting side and the tax side. So I think it's definitely a consumer product that's being embraced and going to be used a lot more in the future. But I think it's going to take a while for corporates to embrace it. But we have enough other methods out there right now, so I think we'll be okay for a while.
Right. It kind of made me chuckle when you talked about that people don't realize the full cost. And when you're talking to, a $1 billion corporation and treasury executives who are used to dealing with millions of dollars, if not more than that, to try and get them to understand that, hey, instead of spending $20 for a wire transfer, we could spend $1 or even less for an ACH.
Yeah.
They don't get it.
That's right.
Okay. Okay. Now moving forward, for each of your payment types, what can the business community expect with regards to, and let's start with ACH, Rob, in the next few years?
Sure. I think, ACH has some great features with respect to cost and convenience, supports remittance advice and cash application and all those processes. I think for the business community, I think you're going to continue to see what we call the windows expanding. So you'll be able to send the same day ACH more times throughout the day. I think, you didn't hear it here maybe, but the limit will probably increase a little bit. People seem pretty satisfied with $1 million, but I think, again, as we have more comfort with the managing the risk around that, you can see not only the windows increasing, but the ceilings increasing as well. And then I think with respect to all the different payment types, regardless of whether it's ACH, same day ACH, P cards, crypto, wires, I think what is evolving as well are the fraud related tools. Getting back to a message you preach very often, Mary, and people have said on the panel here as well, understanding the rules, having the internal controls in place, and having system availability to support that, and having tools to support that to help manage fraud and risk.
Okay. Lynn, there should be lots of interesting things on your horizon.
Well, no, absolutely. What I was going to say is, think about real-time payments or instant payments. You've got the Fed's product or service being released next year, FedNow. More banks are preparing for these payments, and that would have been another reason some organizations aren't embracing them yet, because their bank perhaps is not ready to accommodate real-time payments. So you'll see that, the extent to which banks start to push instant or real-time payments is yet to be seen. I've heard a lot of talk in the banking community that they're not certain. They know they have to build it and be ready, but they're not necessarily hearing that their customers are demanding it just yet. But I think that will come. Business to business payments seem to follow the person to person payments, and we know how entrenched real-time payments are in that arena. So they're going to continue to increase in the B2B world. So lots of growth, I think, especially with more choices and more banks being ready. Now, when it comes to commercial cards, I think what you're going to see is more of the invoice automation solutions already just enveloping or incorporating some type of card payment. And we know they're doing this today, but I think we're going to continue to see that happening. And perhaps shifting from a virtual card payment to a straight through processing, like a buyer initiated type of payment, perhaps, simply because it's easier for suppliers to accommodate. So you're going to see a shift there with invoice payments. Straight through payments, I'm talking about within the commercial card space, where the supplier does not need to process an actual card transaction. The money is automatically getting into the supplier's account. That will continue. As I mentioned earlier, a decrease in the issuance of plastic cards and more of a move to the mobile payments, virtual card usage. Just again, continuing to make things more digitized, easier, less touch points, if you will, both for end users or buyers as well as the suppliers. So lots of efficiencies ahead.
Efficiencies, I like
that.
Yes. And Leanne?
So I'll start with wires. And I think we touched on this a little bit earlier, but companies have been paying more attention to fintech solutions that are coming out, and they're having this lower cost payment method to get companies to buy into their solution. So I think banks and providers are going to have to start reducing the cost of wires and transactions in that sphere. And I think wires are always going to be around, but the cost definitely has to be competitive. And then the other part about wires is they are new and continuously evolving global regulations around wires. So I think we're going to see more of that required of corporates to prevent and detect any fraud and any nefarious uses of the wire system. So I think we're going to see a lot more technology around that area. And then I think on the crypto side, this one is going to be kind of to me, it's mind blowing, the things that are happening in this sphere. I think we can expect nothing but change. There is going to be an evolution of payment methodology with crypto. And I just read last week, this to me is crazy, that Lockheed Martin and Filecoin are actually looking at hosting an open source blockchain node in space so they can create a space economy. So for all of us earthlings, we're going to have to learn how the world operates in the future, because it's going to be completely different. And I think crypto is becoming more and more acceptable and required means of payment. So companies need to start now. They need to start learning what it is, understanding how it operates, putting procedures and policies in place, and as well as staffing, because it's coming. It's the future.
It's the future. Yeah. Yep. Probably at the larger companies first. Would you say that?
I think so. And I think it's also going to be more retail-based companies where it's more customer-facing. You have to always delight the customer. They're the boss. So I think that's where it starts.
Okay. All right. That's interesting. So lots of interesting things coming. A lot different than maybe 5 to 10 years ago if we were having this talk where, we wouldn't be talking about crypto, and the things that we would be looking into the future for would not be so revolutionary and, might I say, interesting. So, guys, there are 5 sessions in our AP Technology Week programs. We've put them all in one playlist that you can watch now. The link to it will appear in the show notes, and on YouTube, a link will appear momentarily. As always, I greatly appreciate those thumbs up, those comments, those shares, and those subscribes. Good luck.